Nike just reported Q2 earnings, and we can see how Wall Street felt about it as shares are up 13% after hours, indicating yet another strong quarter for Nike and strong future growth prospects. This means we are now sitting at a market cap of 161 billion, a PE ratio of 29, and a dividend yield of 1.3%. So, seeing as this is one of America's strongest retail sector brands, what do we make of this business after this earnings release? And should we, as value investors, be buying this stock now that they are down just shy of 40% year to date? Well, make sure to stick around to the end of the video as we're answering all those questions and more on today's episode. How's it going? Welcome to Everything Investing. I hope you're having a great day. Today, we're going to break this business down from the top line all the way to the bottom line. We'll discuss everything from the assets to the liabilities to the equity in the business. And using all of that information, we'll summarize that into our intrinsic value calculator, which will identify the buying points for Nike for us value investors. And if you enjoyed this type of content, please subscribe as we post on here regularly, looking in depth on the fundamentals of the various businesses that you're most interested in. So make sure to comment down below on your favorite businesses and the businesses that you want to see us analyze on this channel. But with all that being said, if you do end up enjoying this video, make sure to like and subscribe. And with that, let's jump into the analysis. Okay, so this is Nike's Q2 fiscal year 2023 results. What exactly are we working with here? For Nike, we can see historically they have been able to grow their revenues, from 2018 $36 billion up to $46 billion as of 2022. Earnings per share has increased substantially. Returns on invested capital have also skyrocketed up to 46%. That's a big number that we look for as investors. And then we can also see they've been able to outperform the market over that same correlated period here. Again, all things that attract investors. And then when we get down here to their revenue, how exactly does this business produce revenues? And if we take a look at this chart here from Main Street Financial Data, the first link in the description, you guys got to check them out because they post these amazing charts that really help us retail investors break down key fundamental data. And as we can see here, Nike's business is comprised of four main segments. They have footwear, which is their main revenue component. Then they have apparel and equipment, which make up the remainder. And then there's the small segment that they plan on growing, their global brand divisions. Very small revenues so far. And that's just because it has to do with their licensing fees. But you almost can't even tell that it's a part of this chart. We'll get into the details in just a second when we break this down here on their divisional revenues. We can see if we look at this from a regional perspective, we can see their main regions they operate out of: North America, Europe, Middle East, Greater China, Asia Pacific. But what I really want to focus your attention on here is the constant currency changes for this quarter so that you can really see how this quarter has progressed without any of the currency challenges. And as you can see, almost across the board, we've seen amazing growth here. 39% growth in North American footwear, apparel is up 14%, and equipment is up 26%. Altogether, 31% growth in the North Americas. Similar in Europe. Now in the Greater China area, we have seen only a 6% increase. This is because apparel and equipment are down kind of big here. And again, it's kind of to be expected with the economic hardship that China's facing. I mean, they're still going through some lockdowns and the economy is just not in a great place over in China. And so almost universally across all businesses, you are going to see slowdowns in their China segments. And altogether, that's a 28% increase year over year. Definitely some strong growth from a business like Nike that was actually struggling with inventory. We will talk more about that in a second. Again, if we use this chart here from Main Street Financial Data, we can see how they have been able to expand this business, from a year like 2016, albeit a slower year for Nike, but how they've been able to translate and grow their segments across regions. Obviously, North America has been relatively constant with that growth there, but Nike is really expanding into Europe and even Greater China as well. And it's a testament to the business and their marketing, which is something they actually spend quite a bit of cash on. And that's something you can see just down here. We'll get into that in 1 second. First, we bring down our revenue figure for this quarter, 13 billion, deduct our cost of sales of 7.6 billion. We're left with gross profits 5.7. That's a 43% gross profit margin. And then once we deduct for their demand creation expense, in other words, marketing and advertising, $1.1 billion there. Then they have overhead to operate this business of $3 billion for a total of $4 billion of operating expenses. That leaves us with just $1.6 billion in operating income on the $13 billion in revenue. At least for this quarter. And of course, this is going to be an asset heavy business. They have tons of inventory on this balance sheet. And of course, with the operating overhead that we mentioned, that means they have a lot of facilities. So again, definitely asset heavy, and the debt really shouldn't concern investors as equity has been growing as well. Unfortunately, this business did not produce a free cash flow statement for us to look at and analyze, but we do know that they do pay a dividend, and that's obviously what most of their money is going to be spent on. And so with that out of the way, let's just jump into our calculator here to see at what price point we should pick up shares of Nike for if we're looking for a margin of safety. And if we take a look at this chart here, again, Main Street Financial, first link in the description, you can see how this business has been able to grow their gross profit. Hasn't translated so well to the operating income, but if we estimate that they can come in with about that $5 to $6 billion price range here for operating income, and they kind of are on track to meet that. If we take a look back over here at their operating income for the first half of this year, that's not including the holiday season that's coming up. So far, they already have about $3.5 billion worth of operating income. So if we estimate that on the next half of the year, especially with the holiday season about to be priced in, they definitely should be able to reach that $6 to even $7 billion price figure in terms of operating income. So if we plug that $7 billion figure into our calculator here, if we require a 10% return, they do currently pay a dividend, albeit only 1%. And if we expect this business to grow at, a modest, let's just call it 7% for the first 5 years going forward, then let's say they normalize out at around 4% growth on a year-over-year basis for the 5 to 10 years after that on a 30 PE like they're trading at currently, the stock should actually be worth about $162 per share. Right now, we're actually just trading at $103 per share. Now, that is before the 11% price increase after hours. But in a normal scenario where the economy rebounds and people are really buying their footwear, apparel, etc., $162 per share in the very normal case is a somewhat reasonable estimation here. Now, in the very best case scenario, let's say that on the backs of that rebound in the economy and with higher demand for their products, let's say they can grow at 12% for the first 5 years. That drops down to about 6% for the 5 to 10 years after that on a 35 PE. The stock would be worth up to $240 per share in the most optimal situation for Nike investors. Now, in the very worst case scenario, further competition, more rate hikes, less consumer spending in the markets, etc. This business can only grow at, let's just say, 4% for the next 5 years. Then that drops down to only 1% for the 5 to 10 years after that. This is very conservative, guys. They'd still be worth $100 per share from that standpoint in the very worst case scenario where they're at minimal growth rates here. So make your own determination on that as you will. But with that being said, this is still an amazing business. I mean, they were just back down at $63 per share back in 2017. They were able to grow all the way up to highs of $175 per share, 150% stock increase over 5 years. And this is a business that has been around for quite some time, IPOing back in 1980. So the business has been kind to investors. It has been able to compound year over year over year, but we have seen that decline recently. And this may just be the buying opportunity that us value investors have been waiting for with that nice pullback in the stock. But let me know your thoughts in the comment box below. Are you a buyer of this stock? Is there better alternatives in their competition? Does Nike deserve a spot in your portfolio? Again, let us know in the comment box below. That's the analysis for this video. If you've enjoyed it to this point, smash the like button, subscribe, and I'll catch you on the next one.